Okay guys, welcome back to another weekly Forex signal review. If you guys are new to this channel, here's where I basically break down all the signals that were sent to my Telegram channels. So I haven't done a video in the past 2 weeks and I must apologize for that. But for those weeks, I think we were able to make about 913 pips. If you guys are interested in seeing those trades, definitely check out our Instagram page. The link is in the description below. But for this past week, we were able to make 399 pips, and I'm going to show you guys exactly how we were able to do that. So yeah, let's start off with EuroCAD. For this pair, what we were interested in particularly was this bearish engulfing candle outside of this resistance zone right here, this candle. So we had our stops behind the resistance zone there and entries below the resistance zone right there. We got triggered in on this candle and this trade went all the way to 1 to 3. So on this trade we made approximately 313 pips. This trade was pretty straightforward, as you can see. I mean, bearish engulfing candle outside of this resistance zone right there, definitely a sell signal, and our targets were close to this resistance / support line that we have drawn right here. I was expecting this sell to be a little bit more aggressive though, but you can see that the market is respecting this resistance / support zone right here. You can see it respected it right here, here, and this looks like it was a bear trap, because you can see that this is definitely a sell signal right here, this bearish pin bar rejection of the 8 moving average, this red line right here, and it's also rejecting this resistance / support line right here. But whoever sold right there definitely got caught in this bear trap. So for the coming week, this could be a buy with targets within this zone right here. But I don't think buying this would be a good idea. We could probably play the breakout of this swing low right here, stops behind this, because this downtrend could possibly continue. You can see we have lower lows, lower high, lower lows, lower high, lower lows. This could be a lower high, so we can play the break of this swing low right here with stops at this swing high and targets at this support level. So for the coming week, that is definitely something to look out for. Let's move on to, I didn't show you guys the entry on this one. So yeah, here's the entry on EuroCAD. Stops right there, entries right there. We got triggered in on the second candle, and like I said, I was expecting it to be a little bit more aggressive, but you can see that it is respecting this resistance / support line right there. But definitely we're looking for more movement to the sell side on EuroCAD. So let's move on to EuroJPY. So for this pair, I was playing this ascending channel. So let me clean up this a bit, zoom out. Okay, so generally speaking, whenever you see that the market is in a downtrend, like what you're seeing right here, lower lows, lower highs, lower lows, lower highs, lower lows, and then you see an ascending channel, that is a bearish setup, and you can definitely look for the market to break out to the lows of that channel and create lower lows. So that is exactly what I was expecting, and it played out pretty nicely. As you can see, we got 1 to 6 on this trade. Let me show you the entry. So I saw this nice pin bar rejection right here, and not only that, this candle is rejecting this gray area right here, which is resistance, but it's also rejecting the lows of this channel and both the 21 and the 8 moving average. So that is a very strong sell signal. So that is why I expected this market to break this level right here, this line right here, which is actually the highs of a descending channel, I believe. So let's go back to the charts and look at that. So yeah, let me zoom in a bit. here is the candlestick that I was interested in. So you can see that it is rejecting the lows of this channel right here, and both the 21 moving average, and it is also rejecting on this gray area right here. So that in itself was a very bearish setup, and it played out nicely, gave us 1 to 6. So as I was saying, I was expecting it to break the highs of this channel right here. Let me zoom out. I would have to go on the daily. So here is the channel. You have this nice descending channel, and then so even on this bigger picture you can see the same thing that I was saying about an ascending channel. Whenever you see that the market is in a downtrend and there is an ascending channel, you can always expect generally the market breaks out to the lows of that channel. So from here, from the highs of this channel, the market entered into this downtrend, and then from there we saw an ascending channel right off the edge of this channel right there, and we got a breakout to the lows. So not only that we saw an ascending channel at the lows of this downtrend on the daily time frame, but we also saw another ascending channel right here. It looks a bit choppy on the daily, but if you go down on the lower time frame, you can see that it is an ascending channel. So I saw something just now on the daily time frame that I wanted to point out to you guys. It is a even star formation. This candlestick formation right here comprises of 3 candlesticks, a very bullish candle, this blue one right here, and for those who are kind of new, the blue candles bullish, the open low, close high, and the red candles are bearish candles, they open high and close low. So for the even star formation, like I was saying, is that it comprises of 3 candlesticks, a very bullish movement in prices, and then the second candle is normally a smaller body candle. It can be either bullish or bearish, and then the third candle gaps down. As you can see right here, you can see that this candle opened low and then closes more than halfway down the body of the first candle, and you can see that this candle actually pushed all the way down and then came back up to create this wick right here. So yeah, this formation in itself right there also gave you a heads up that hey, this market is going to sell off. So we were able to make $252 pips on this trade right here. So let's move on to the CAD. For this pair, initially I did not see this ascending wedge, which is also a bearish setup. So what I was doing, I think I was buying this because we close within this line that you're seeing right here is a channel. I'm not sure if it was an ascending channel or a descending channel. Yeah, it was a descending channel, and a descending channel is actually a bullish setup. So an ascending wedge is a bearish setup, an ascending channel is a bearish setup, a descending wedge is a bullish setup, and a descending channel is a bullish setup as well. So from this daily time frame, you can see that generally the Canadian dollar is stronger than the Aussie dollar. So we can see we have this aggressive breakout to the lows of this channel right here. So I thought that this move out of this support area right here would have brought us back into this descending channel, and we know that a descending channel is a bullish setup. So I was expecting it to go back to the highs of this channel and then continue respecting it like it has always been doing. Let me go back and show you. So since 2016, the CAD has been respecting this descending channel, and due to the whole coronavirus, we have this breakout. So I thought that this was the market recovering, and we would go back to the highs of this channel and then continue to respect it. But that did not happen, and like I said, I did not realize this was an ascending wedge. So what I was doing, I was buying this. So when I saw this bearish pin bar rejection right here, I'm like, no, I'm not going to sell this market. So I had my entries, I think, at the highs of this week and the lows. And this candlestick right here, this pin bar rejection right here, took me in and then stopped me out. And it wasn't until that happened before I realized that this was an ascending wedge. So let me show you guys the entry that I took on this pair right here. Oh god. So yeah, here's the entry. So it looks like I was playing this pin bar rejection of the 8 moving average, this red line right here. So I had my entries at the highs of that, at the open of this bearish candle, and my stops behind this wick. And that pin bar rejection that I was showing you guys before took me in and then stopped me out, and then from there I realized that this was an ascending wedge. So when I took this trade, I was only paying attention to the market making higher highs, higher lows, higher highs, higher lows, higher highs. So I thought that the market would have continued in that same movement back into this channel, but that did not happen, and I actually got stopped out. So we lost 98 pips on this. But as you can see, I re-entered this pair using this entry right here, stops right there. The market, this was the candle that took me out, and I realized that this was a ascending wedge, and then I just went the other way, and we're a little bit above 1 to 1 right now. Seeing that he rejected this channel, I'm definitely thinking that it's going to break this support zone right here. So we can look for this market to hit 1 to 6, and then from there I'll probably look for another entry outside of this zone. So I'm expecting it to push all the way down and then pull back and respect this zone as resistance to and then continue into no man's land, because as you can see, I have no support down there at all. So yeah, that is scary. Well, for the Australian dollar, not for me. So let's move on to GBP and ZD. For this pair, you can see that the market was consistently making higher highs, higher lows, higher highs. It's probably difficult for you to see if you're new, but from here to here, you can see that the market is going up. Anyone can see that. So if you look at this line right here, acted as resistance right there, and right here. So we know that all resistance becomes new support. So playing this last week, I was expecting the market to pull back and respect this zone right here as support, bounce, and then go higher. But unfortunately, we did not get triggered into this trade. If it does, no, we're going to cancel this. Seeing that we did not get triggered into this one, I think I'm going to cancel this buy, because what I'm seeing now is sort of a wave formation that I'm very used to. We have, I call it the significant wave, I don't really know the name of it. So it consists of 3 wave movements. So we have 1 wave, 2, and then we have the last wave, which is very impulsive, normally goes higher, and then it normally breaks this ascending support, and you may or may not get a retest of this zone right here. So what I'm looking to do right now is sell from right here. So this candlestick formation, I'll probably put it a bit higher. So what I'm playing right here is let's play a little break of this. Seeing that it looks like it's going to go higher from there. Seeing that it looks like it's going to respect this 21 moving average, but I'm definitely, wait, let me play this high. and the break of this low. Yeah, so yeah, as I was saying, this probably the last wave of this three-wave candlestick formation. So we have an aggressive sell-off after the third wave is formed, and we normally break through this ascending support, and we may or may not get a retest. But nonetheless, I've seen this wave formation several times. Let's see if this is going to be the last high and then we get that impulsive move down. So we could have played the breakout, but I didn't want to do that because this market was kind of ranging. So I was hoping that the swing low would respect this right here. But definitely the brokers and the big banks saw that a lot of buys was right there. So probably that's why the market did not retest that zone, because it was pretty obvious. Let's move on to USD CAD. So for this one, I was playing this candlestick right here. I thought it would close as a bearish engulfing candle when I first saw it, but it closed as an indecision candle. So an indecision candle is basically a candle with equal wicks. So it has a small body and equal wicks on both sides of the body of that candle. So the name itself basically tells you what it means. It means there's indecision whether the market should continue to go higher or go lower. But seeing that this one closed bearish, meaning that it opened high and closed low, the bears kind of won the battle on this one. So, but there is still some possibility that this market can go higher, because you can see that right here is a support zone, because we know that all resistance, because you can see that it acted as resistance right here, becomes new support. But seeing that this is an ascending channel, I believe. Let's go to the daily time frame. Yeah, it's an ascending channel. What could be forming right here is a triangle, bullish triangle, and we could see a break to the highs, because this is a very bullish uptrend. But despite that, I'm expecting the market to continue to sell off. I'm gonna go back to the 4-hour time frame. Messed up my entry, bro. You know that with every trade we're aiming for at least 1 to 3, so it's about right here. Entries. Yeah. So entries right there, stops right there. So for this one, I'm expecting the market to push down. A lot of stuff happening right here. This looks about right. And so seeing that after this very aggressive bull run, we respected the highs of this channel, I'm expecting the market to now continue to respect this channel. So we hit the highs, so I'm expecting to hit the lows right now. So yeah, this could be another ascending channel at the lows of a downtrend. We know that an ascending channel is a bearish setup, so I'm expecting the market to break out to the lows and then respect the major channel. So for this one, I'm going to go with my stops right here and entries right here, targets at 1 to 3. So let's move on to NZD-CHF. So this one was kind of struggling. So for the whole week, this trade kind of struggled, and I ended up closing it because it wasn't working out. But what I was playing was this ascending wedge, which I've been saying is a bearish setup. So I had my stops right here and entries right there. Not sure where I got triggered in, but I can look for the entry shortly. So we got triggered into this at some point, not sure where I entered, but I was playing on this ascending wedge. So clearly the market rejected the lows of this channel, this line that you're seeing right there. Let's go to the daily. So you can see that the market is in a descending channel. Let's zoom out. so you guys can see that. So we're not expecting a breakout to the lows, so that is clearly due to, in my opinion, to the coronavirus. But nonetheless, you have to play what you see, and what I'm seeing is this ascending wedge at the lows of this downtrend, and so I'm expecting this downtrend to continue, along with the fact that prices are literally rejecting the lows of this channel. So yeah, due to those reasons, I was interested in selling this market, but seeing that it was struggling to make lower lows and close outside of this gray area right here, which is acting as support, I just cancelled it and moved on, because I didn't really see where it made sense to hold it and then probably get stopped out. So due to that, I just cancel this trade. So yeah, that's it for NZD/CHF. Let's move on to Euro USD. For this one, I was looking at this move down as a descending channel. Looks a bit ridiculous now. So what I was expecting was a breakout to the highs of this channel, along with the fact that I was expecting it to respect this line right here, which acted as resistance / support back here. You can see it bounced right there, broke through, came back up, got rejected, came back up again, got rejected, came back up again, got rejected, and then we had this bullish engulfing candle stick right here, and the market exploded from there. So seeing that we were in a uptrend and then we had a descending channel, I was expecting a breakout to the highs of that channel, because we know that a descending channel is a bullish signal. However, we did not get triggered into this one, and seeing that we're back below this resistance / support line right here, this play may not happen. We may continue to make lower lows from there, and may or may not respect the lows of this channel, because Euro USD is in a, I think it's in a descending channel. Yeah, I just changed the color of this line to make it a little bit more distinguishable on the lower time frames. But yeah, so yeah, with that said, we might have to cancel this buy idea and wait for the market to either close back above this resistance / support line right here, or respect the lows of this channel right here, like it did back here with this bullish engulfing candlestick. If you look to the left, you can see that this bearish candlestick is completely within the range of this bullish candlestick. So yeah, that is a bullish engulfing candlestick off the lows of the channel, and it played out beautifully. So for next week, we're looking to see if the market is going to break and go higher or continue on its way down. So yeah, that's it for last week's trades. Hopefully you guys learned something new, and if you're interested in seeing more videos like this, please don't forget to like and subscribe. Also, if you are interested in joining any one of my groups, the links are in the description below. So yeah, see you guys at the next review.